Let's zero in on the tech sector. The industry is seeing sharp decelerations in hiring in recent years, leading job cut announcements during the month of March, according to Challenger, Gray and Christmas. But our next guest says that the sector is now showing signs of recovery and improved momentum. For more, we've got Kantenga, who is the head of economics for the Americas at LinkedIn. Great to have you here in studio with us this morning, Corey, on Jobs Day. As we're all celebrating, we're all trying to figure out, okay, hotter than expected. You're zeroing in here on tech. What are you seeing there?
So the tech sector has actually become pretty stable since about June 2023.
Yeah.
So while overall hiring has come down about 8%, we actually see it up in tech about 5 to 8%. So tech has sort of started to stabilize. Don't get me wrong, hiring is still slow in tech compared to what it was a few years ago, even prior to the pandemic. But we are starting to see tech level out. We're starting to see layoffs in tech stabilize as well. And so some of what we're seeing for layoffs in tech is seasonal. Some of it is that there are just these huge companies that make big headlines. But overall, layoffs are starting to come down. Hiring is starting to level out at a steady pace in tech.
Corey, when you take a look at the sectors, the sector hiring, the basis that we saw there, healthcare, which we just went through, construction, hospitality, among the sectors that added the most jobs here this past month, is that consistent with what you're seeing on your platform?
So what we're seeing on our platform is that there are certain sectors that are a bit more stable. So for example, government administration is one of the top 3 sectors we're seeing. There's also what we call consumer services, which is kind of a catch-all for things that don't change very much: repairs, laundry, civil society. And so we see those areas being pretty stable on LinkedIn in terms of hiring. Well, that's consistent with what we're seeing in the jobs report. We also see construction as one of the areas that's doing pretty well year over year compared to a lot of other sectors.
When I look at this participation number, we had a slight tick higher, moderation higher, even though the report will say, it didn't move much. I mean, it's significant though. When you think about the broader number of people, and we see the circle and the avatar that people have on there saying open to work or hiring now on LinkedIn. What are you seeing in terms of the number of people that are actively looking for jobs on the LinkedIn platform and the number of engagements as well that are leading to some of these job postings being filled?
We certainly see more engagement and more job-seeking activity.
Yeah.
So the open to work signal has been up. We've also seen applicants putting in more applications. So that's up about 14% compared to November. So we are seeing more job-seeking activity on LinkedIn, even though there are less job postings to get.
Interesting.
What does that tell you then just about competition and the likelihood that that competition, it sounds like, will increase here, at least over the next couple of months?
Well, the overall projection for the economy this year is that we're still expecting some slowdown as the Fed rate hikes peak. We're going to get hit a little bit more. We haven't fully seen the effect of what the Fed has done. So we are expecting there to be a little more air let out of the labor market. And as a result, there's probably going to be more competition between workers.
All right, Corey Kantenga, we have to leave it there. Head of economics for the Americas at LinkedIn. Thanks so much for joining us here at the desk.